yes, oh yes, oh yes, legends. How's everybody doing? Hope you're doing well. Much love. Let's analyze the situation here. For the price of Bitcoin, let's say hello to the beautiful community. Of course, first of all, much love, much love, much love. Let's go. Happy to see you guys here. Much love. Let's see what's going on in the comment section. Zooman, how are you doing? 59k incoming. We shall take a look at that. Price of Bitcoin is getting a little bit of dumpy action at the moment. We're going to talk about the levels, the scenarios, the new trading local setups, guys. So make sure to stay tuned, okay? Much love. Let's go. Shanjay, how are you doing? Hi, Andy. It's dumping. What is a good level for a long with a good risk to reward? We'll be taking a look at that today. Not to worry. Dakbik, nice juicy longs coming soon. Without a doubt, swing longs are looking very attractive. It's all about knowing how to enter, knowing how to manage risk, of course. Germany is exploring digital assets frameworks because of future financial system. Interesting. Digital sentiment network. Cool. William, downside break looking a bit impulsive. We'll be analyzing that right away. Was hoping for a slowdown, for a diagonal. Leading diagonal. We can take a look at that. Bath Maria, much love. Andy, how are you? Much love. Let's go. Bath Maria, thanks for joining the stream. We'll be taking a look at some scenarios here for the price of Bitcoin, okay? Not to worry. Much love. 32k BTC incoming. Ooh, that's a bit far away. We would have to see a very aggressive capitulation if we wanted to see 32k. Yeah, it's not out of the cards, that is for sure. It's not out of the cards that we do go down to the 30k zone. We are downtrending. We are in a bear market. But soon, in the next coming months, we will be coming to a bottom formation. There's no doubt about it, right? Bitcoin will come back stronger than ever, as it always does when we do get the big corrections to the downside, the bear markets, right? Which usually are around about a year. Give or take 11 months, 12 months, right? Give or take a few weeks of difference from each cycle. And there's a lot of speculation that we'll bottom out somewhere in October, right? October down to, 30k zone, right? Everybody knows that, right? Everybody knows that the bottom should be in October, around about, $40,000 to $30,000. Will it be that easy, right? Because I've seen before in many bear markets that, in the previous one, calling about $10,000, we go lower. A lot of people very bearish about, the FTX collapse that we had in November of 2022. So we need to go with the waves, with the levels, with the scenarios, and get ready for the swing longs without a doubt. Okay, this is the moment to start getting ready for swing longs. Obviously, buying on spot is attractive, of course, here for the next coming years, right? So DCAing into spot as well is not a bad strategy in the long term. Much love. Hello. Olivier, how are you doing, my man? Thank you for joining the stream. Waiting for the stream, Andy. Finally, let's go. Singularity, thanks for joining. Sadvi, how are you doing, my man? Zadvik, thanks for joining the stream. Dark One. Hey, Andy, how are you doing, my man? I'm doing good. Bruno, Matissa, ¿cómo estás? 45k in October, probably lower. Dustin, yeah, I mean, that's the overall cycle, right? Local trend is broken. The local trend, right? Local uptrend has gotten broken here with today's price action. So if you're a trend line breakout trader, right? Short, stop loss at the last lower high and targeting the lows, maybe, right? If that is your part of your strategy. Let's dive in through the analysis today, guys. Much love. Okay, said hello to most, almost everybody here. Not too many comments at the moment. Big love, Andy. Long time no see. Big Cat Honies, how are you doing, my man? Much love. Hey, Andy, bro. Umagongi, how are you doing? Rose, hey, Andy. Happy to catch a stream again. Got my coffee and notebook. Absolutely awesome. Distance music. Nice to see you around. Thank you for joining the stream. Now, Bitcoin. let me know, guys, right? What comes next for Bitcoin? We are currently trading at 61.7. I'm going to create one of those polls for the community just to see the general sentiment, right? So get your votes in here. What comes first for Bitcoin? Then we'll talk about the levels, the waves, the analysis, right? And the confluence zones where price can reject or can get a bounce, right? What comes next, guys? Do we get down to sub 59K? Or do we get up above 64K? Right, let me know in the poll right away. Get your votes in here, legends. A lot of people are trying to catch the bottom, thinking it is close. Very true. Think we can retest 62 to 62.8, right, for shorts. Very possible. We're going to have to take a look at that. However, if we are rolling down, it is a pity because yesterday we were talking about a local double top. We barely just missed that level, which is very, very disturbing. Now, I got a few scenarios on where the corrective move down. Now, of course, we could be looking at a wave 3 impulsive move to the downside being developed here on the local time frame. And of course, the ideal thing is to look at exhaustion at levels of support. Exhaustion is proof of support. It's a bit of dancing, choppy price action that we can get in the next coming hours. And as long as that does not happen, it's going to be very difficult to look for longs here. Okay, very, very difficult. So I'm going to explain a little bit of the local plan here, what I want to see in the coming hours, and we can get some stuff ready for an intraday potential swing setup. Okay, it's a pity that we missed that high yesterday. It was a valid double top, but we missed it by a few dollars. I'm not sure if anybody did manage to enter a short position right over here. It's one of those cheeky levels, right? Where the price missed the local high. For me, it was a valid double top. However, we missed it by a few dollars. And there are a couple of corrective structures here that I do see here on the price of Bitcoin, okay, which I am going to cover right away. They're the ones that look interesting for the bearish case. Do we absolutely nuke from here? It's a very much a possibility, right? Where we can have developed, we could have had developed from this high multiple 1-2s, right? The structure is bearish and you are building up multiple 1-2s just to get that wave 3 breakdown, followed by multiple 4-5s later on, right? Where are those 4-5s going to develop? Down at 40, at 59, 58K? Is it going to be developed in this area? That's something that we need to get ready for, okay? We need to get ready for that exhaustion proof of support, because that's where longs will look interesting. Long in this downtrend at the moment, catch, a V-shaped bounce, is not the plan, at least for me. I'm not catching anything here. It's not worth it. I know what I'm looking for. So I'm going to remain patient for that, and I want to share that plan today in today's live stream. So if you're happy with that, make sure to stay tuned. Do we zoom out and try and understand what do we have here, right? After the brutal move down that we got last week, what scenarios, considering Elliott wave theory, do we have? And where are the most important levels of support? And it's relatively easy to understand. I'll explain that right away. The most important zone of support on the higher time frame, if we're talking about confluence, is a monthly naked point of control, which is very, very strong, of course. And that is from the consolidation that we did have here back in 2024. We've got a major high volume node sitting exactly at 57.9K. This is a very, very good level. It's not a daily naked point of control, it's a monthly naked point of control. And these higher time frame confluence levels are incredibly important. Now, surrounded by that monthly naked point of control at 57.9K, we do have some daily levels, right? Daily levels basically are daily closes, right? And opens that haven't been tested in the past here back in 2024. You can see that daily close and open, daily close and open, not revisited, right? So it's still fresh. It's still fresh daily levels. And those daily levels are surrounding the monthly naked point of control. Hence, this zone is very, very attractive to get a bounce, okay? Very, very attractive to get a bounce. Is that bounce going to be small or is it going to be massive? Nobody knows. Nobody knows, but it is a bouncing level. It is a bouncing level. That's where your plan, your risk management comes into place, because we don't know how big the bounce can be, right? Coming down to this very important confluence level. So I like that zone. That's something on the higher time frame that I know, it's in my trading book, right? That this area is very attractive to look for long positions. Now, when we do consider Elliott wave theory, we do have the momentum to the downside starting here from 82.7k, which is a slow grind to the downside, right? And then we got the brutal move down. I very much like the possibility of this being an impulsive move to the downside with an expanding fifth wave. It is valid. Expanding fifth waves are common when there's extreme greed. That's if you're in a uptrend momentum, right? Expanding fifth wave. Wave 3 cannot be the smallest. You get FOMO, right? Just finishing that, shooting fifth wave right there. And in the bearish case, it's when max fear kicks in, right? Max fear kicks in, and then you have the possibility of an expanding fifth wave. It's one of those scenarios that it is possible. There's what's on the formation here. Now the question is, low is in here already, or do we create one more low? Throughout the last couple of days, we were discussing throughout the latest lower high before, the momentum gets aggressive. You could argue discuss it's this one. But when we talk about Elliott wave theory, here's where you have a 1, 2, 3, 4, 5 to finish your third wave. Then this is your wave 4 here. To finish the third wave here, you got too many waves, and it fits better to have this as a wave 4. Now the main problem here, if we had to have something finished at the lows, which was an option the last couple of days, you need to fit inside of the latest move down a wave 4 somewhere, right? Because you need 5 waves, and there is a bit of a problem to try and figure out where's your wave 4 in this brutal move that we got last week. They're quite shallow, they're quite small, and it seems like that all of this price action is an individual wave. That said, it makes sense to believe that this is a wave 1, a wave 2, and that's a wave 3, all of this. And now, because we've separated from the local move down of last week, this kind of looks better to fit as a wave 4, to then get your latest move down in a wave 5 that could get developed in the next couple of days, right? That said, because we got the most brutal move to the downside with the highest amount of volume, right? That's the brutality move down. We can stay bearish, we are downtrending, but it's just understanding that the most aggressive move to the downside from the last few weeks already happened last week. With that said, the probabilities, considering the guidelines of Elliott wave theory, that if you already have a brutal move, right, with high volume, getting another brutal move down with no local ranges, bounces, right, is low probability, right? That's only in the guidelines when we consider Elliott wave theory. If you've already had a brutal move down with high volume, you always want to consider it your wave 3. or in this case, your wave 5, right? Because we started the downtrend in this zone. So, either extended wave 5, or we have 1, 1, 2, and another 1, 2 here, right? Where your wave 3 is getting developed, and we are missing a few 4, 5s that should be on the formation throughout the next 1 to 2 weeks. That's what makes more sense here when we consider Elliott wave theory. Do we get a collapse down to, sub 50K in the coming days? It is obviously possible, but when we consider the guidelines and rules, it's a low probability scenario. So why? Because the most brutal move happened already, right? It's only because of that. So might play out, low probability might play out again. Yeah, exactly. Well, this was the brutal move down, right? This was the brutal move down. We didn't have any solid wave 3s here. I mean, this was the wave 3 that we were considering a few weeks ago. But overall, connecting the dots, we can either have 1, 2, 3, 4, 5 extended 5th wave, or multiple 1, 2s. That's your 3rd wave here, right? We need to adapt to the market conditions. So this is what we got. If we were to be forming an extended 5th wave, it is very valid to understand that we do have the possibility of wave 4 and wave 5 still on the formation here. An impulsive move, right? A wave 5 or a wave 3 or a wave 1 needs 5 waves to the downside. So is it possible that we are forming the 5th wave of the overall higher time frame 5th wave, right? And I have to say, yes, that is very much a possibility. Where is the most attractive zone for that 5th wave to finish? And there's a few options. This is higher time frame stuff, guys. We'll go through the lower time frames right now in the next coming minutes, give or take 5-10 minutes, till I explain a little bit the higher time frame bias, right? What we're looking at here. A few options we do have. The classic double bottom, where you sweep up the lows at 59K, and that's where your wave 5 finishes, right? And you get that double bottom. Local double bottom, always valid for a SFP, double bottom. They are easy to trade, they're easy to manage, they're easy to get into. Once the price gets back above, okay, that's where it looks interesting for the long trade. If price just gets follow through, the most important zone of support, as explained, is the daily and the monthly naked point of control. So if that level is lost, the lows at 59, we could be looking at this area as support to potentially finish that 5th wave. Monthly naked point of control, daily level, very interesting area. That's if we do lose this low, then this zone becomes the zone to find the SFPs or the market exhaustion, right? Where you go sideways. So if you were to drop aggressively, market exhaustion, sideways momentum, getting ready for that little reaccumulation for the bounce, right? Will the bounce be poor and get another move to the downside? Or will the bounce be aggressive and get a significant rally throughout the next couple of weeks? That's the main question, right? Supports are there, confluence is there. That's one of the higher time frame levels where I would very much consider swing long setups, okay? Now let's go right away through the other scenarios, and that is having multiple 1-2s to the downside from 82,800. Now the way to see this is that you would have a wave 1 right over here finished, a wave 2, you're getting your wave 3 finished in this area, and then here you would have a 1, 2, 3, 4, 5, and that's to finish your wave 3. So this is another scenario that could be developing here. The opportunities, right, are still there. They are still there. The overall question, as we do have this grinding structure to the downside and the most brutal move down, right, we only have a couple of options here. Option number 1 has just been explained, which is the extended 5th wave. And we're looking for the price to get a significant rally, testing the lows or not, right? Or you test the lows, you get a poor corrective bounce, such as the one that we got between the weekend and today, and the price takes out the lows again. As explained, the opportunity still is in this zone. We just don't know quite well if this would be the low to get a larger bounce, or do we get one more 4 and 5? Then the opportunity naturally will be detecting that momentum to the downside, a triple bottom scenario, reclaim of the lows, and that would be the long opportunity to get the bigger bounce, right, throughout the next couple of weeks. So you might think, why are we looking at all of this? Because we are in a bear market, we're going to go down to sub 40k. Yeah, that is fine. That is fine. But however, when we take a look at the latest move down of the last few weeks, it would make sense to not capitulate directly here to the downside. Now, a lot of people are going to be judging me because of this capitulation. Capitulation was very much on the cards to get down to 60k. It was the local bounces which we were, they were shallow, and capitulation came sooner than thought. Okay, but it was very, very obvious that 60k was the highest probability scenario to happen in the coming weeks, right? If not months. It overall happened in 1 week, basically, right? So is the capitulation down here possible right there? I mean, I have to say it is. It is definitely, nothing is impossible. It's just based on probability scenarios. The brutal move has happened already. So what would be expected is to get one more 4-5 and get a larger bounce, or get the bounce and one more 4-5, right? Those are the two main scenarios. And it's extremely important to understand how to trade this. Okay? Very important how to trade it, because if you have no idea on how to trade it, people would just randomly long with limit orders, and if price capitulates down to sub 50k, you're going to get caught underwater, right? And we don't teach that here, right? We're not a fan of all of this, right? So the levels of support, the reclaims, and your risk management to have stop loss and get into the reaction of those levels to have a stop loss is how it needs to be traded. It is that simple, but people get excited. People don't have time. People want to get into an epic long position with, not wanting to miss the swing long once it bounces, be it at 57 or be it at 50k, right? We all want to get into that major rally, right, when the bear market finishes. But you want to be cautious naturally, because we could be going to much lower prices, right? Muy importante. So that zone becomes very, very interesting. Now, as we're getting this movement to the downside, we're going to zoom in. There's not much that we can discuss based on the highest probability scenarios. If the price were to capitulate down from here, I would say that, you are very much extending this movement down. I would say you'd have an extended 5th wave off the 5th wave here. So you are looking for an extended fifth wave, and you might extend your fifth wave if it does capitulate of your fifth wave. So overall, the higher time frame fifth wave is an extension already, and inside of the fifth wave you're extending also your fifth wave. That's if we were brutally going to break down below the major levels of support, right? So most important zones are the ones as explained. There is a weekly level at 54.8k, monthly naked point of control at 57.9k. We'll be zooming in on the lower time frames to explain what I'm looking for an intraday setup. See if we can get one on the live stream, just like we did on Friday with that SFB that I managed to lock in some pretty interesting profits, right? Just a little local bounce that we got on Friday that was traded on the live stream. So right now price is moving down with some increasing volume, and yeah, naturally I would not be interested at the moment in any long positions and shorts unless you're a breakout trader. Then, you know, where you could have attempted a short is, you know, breaking the trend basically, right, and putting stop loss above the last lower high. If you're interested in that, right, shorting in this zone as you're breaking the trend. Now, this move to the downside needs to get follow through. It needs to get follow through if we want to see this, you know, being quite bearish. Let's talk about the type of corrective structures that we can have in this zone, and understanding if this is going to be an impulse, where does it start from? Does the impulse start from here, or does it start from here? And I've got both scenarios here, and understand how the next price action needs to develop for me to consider a long trade setup. Let me know anybody that is in shorts. For me, the plan yesterday was a double top, but we missed it by a few dollars. That would have been a brilliant catch of the high, and only main short here would be a trend line break. You know, I had no major strategy here to get into a short position, but if you're a trend line breakout trader, stop above the last lower high, if you would have gotten that high, it's very, very likely that this would have been corrective and you would be tackling the high. So having a stop loss above, you know, the highs here wouldn't have been the game plan, right? Having a stop loss above the last lower high would have been more than enough here, because if you take out that high after the fake out of the trend, you would likely take out these highs. So let's talk about the possible corrective structures that we can see here. Very, very complex ones if this is going to turn out to be a wave 4. Wave 4s like to be complex. Nobody understands them, or very, very few do. Okay, and I'm here to explain that to you right away with my experience looking at Elliott wave theory, right? They're very choppy. They can be very WXY structure where you have double zigzags, and, you know, or a sideways WXY. They can be very, very complex, and that is very, very common for wave 4s, and that's what we talked about here. You know, wave 4, this is very wave 4 price action, and this is very wave 3 price action, right? High volume, big move, choppy uptrend. Okay, very, very common for a wave 4. So if that is going to be a wave 4, what kind of wave 4 do we have, and where does the impulse start? That's what we are here to do, to figure that out, right? So when we do take a look at the movement here from the low at 59, I can see a move up, a correction, and another move up. So I really do understand that I do have an ABC looking, right, movement to the upside here. That's if I want to build up a corrective structure. The movement down here, very choppy and overlapping. Okay, so we know that this has been corrective because the price took out the high. So zigzag move to the upside as a wave W. Corrective move down as a wave X. I would not want to label this movement as the wave Y just because it was, very, very quick. Very, very quick compared to wave W. I don't like it. I don't see you do have a little zigzag here, really. But it's, based on timing, we can discuss that. Yeah, we maybe we can treat it as a high, right? Let's say that we're going to treat it as a high potentially, where we have the 1 2 1 2 1 2, right? And then we start the wave 3 here. If that is the case, this is going to take a little bit of time to go down in that wave 3, still moving down, right? Do we get forming a little bit of a reaction right over here for any aggressive scalpers at this higher low? It is aggressive. Little teeny weeny SFP might pump a few $100 for anybody that wants to get into aggressive SFP right there. Already missed it. If this is the corrective structure, we have movement down, lower high. There's no impulse formed here, so it has to be another 1 2 and another 1 2. For the moment, I have 3 1 2s. With this being the possible wave 3, I would want to see follow through, and I would want to see a slowdown somewhere in this zone. Get that slowdown, right? Get that slowdown, and this kind of price action is the one that's going to be looking interesting for the exhaustion and the bounce. Of course, this would be an impulsive move down. You might find that corrective structure, bit of a flag staircase to the upside, and then we nuke down, right? Sub 59K in that wave 3. So wave 1, wave 2, and then last off. But shorts will be looking interesting in the next couple of days, because if you finish a impulsive move to the downside, which will be detected once you get a bit of choppiness here, 4-5s, right? Get a couple of 4-5s in this zone. That's the moment where you know that the price can bounce, and then shorts for a lower high will be looking quite attractive. But that will take a couple of days, right, to look for the wave 3 breakdown. So based on this, if the corrective structure did finish at this high at 64.2K, and we are forming an impulsive move to the downside, which is not yet clear because the big move is starting. Let's say that the big move is starting right now. You get that slow momentum down. You need the big move, right, to develop itself. And once the price starts stopping, right, and ranging and dancing a little bit, that's the moment. Right. Got someone here. Yeah. Karaoke. Yeah. Enough of that. So the exhaustion here is what's needed to have an impulsive move to the downside. You got your wave 1s and 2s. Wave 3 potentially getting developed. We'll talk about the bullish case scenario, of course, now in a second. And now you would want to see that exhaustion in, we don't know where it's going to happen. But wave 3s come to an end at some stage, right? Regardless if you follow through here already to 59K and then you get the exhaustion down here, right? 1 2 1 2 1 2 3 getting developed. Where is it going to finish? The moment you know it's coming to the end, it's when you have the 4-5s, right? That's when you realize that, right, you finish the most brutal move, right, and you're coming to that last stage, right, on the 4-5s. So Yeah, that's all right. Karaoke has been, yeah, we've removed it already, okay? Not to worry. Yeah, someone was talking about adoption and I don't know what, but too many times. If the exhaustion starts here in this area, why is this area so attractive for the local bounce? Now, the local bounce can be a corrective structure in the next few days, and shorts will be looking very attractive, okay? Because you would have a kind of a confirmation of an impulse. So yeah, local longs are okay as a day trade, okay? In this case, if you're going to get that exhaustion choppiness in the 4/5s in this territory. Why this territory is attractive is because we have a daily naked point of control, right? From this range, you can see here how that high volume node looks interesting for those fake outs, right? You're faking out from that point of control of this range, and getting a few fake outs is what you want to see here for that local bounce. That's where the double triple bottoms become attractive. So I would only have potential long setups throughout the next coming hours here, based on proof of support, choppiness, and a local bounce, which can be $1,000 to $2,000, right? Realistically. Then depending on that price action that happens throughout the next 24 hours, a corrective structure will be, we will be analyzing a correction. Naturally, if you do get an impulse down, you would want to see a possible 3-wave structure to the upside. We're not sure if we would get that big bounce here, but obviously we got another naked point of control from yesterday's price action here in this territory, which is, let's see if it does want to load. Not sure why it's not loading. Value area low, point of control. There could be some, there could be some interesting snipey trading scenarios by tomorrow for another short if we were to prove itself that this has been an impulse, right? We need the 4/5s to say, okay, we got a possible impulse, right? At least 2 4/5s, potentially 3, depending on how, you could add another 1-2 in this territory. But shorts will be looking attractive on the bounce once we got an impulse confirmation. To have an impulse confirmation, we need a couple of 4/5s here, because an impulse is a 1 2 3 4 5, and then inside of the 3 you have a 1 2 3 4 5, right? And that makes it double 1-2s, double 4/5s. So bounces today look more attractive. Just gonna have to remain a little bit patient, because this can really come down below 59k, right, in a few hours. So we want looking for longs here requires a lot of patience. No V-shape, no catching the lows for me here. Not worth it. And we are downtrending, and we are eyeing to hit sub 59k. With that said, I'm going to be very, very careful with the long positions. Okay, very, very careful, very patient. We're here to make money, not to lose money, right? So very, very patient for that, for the long setup, and that is getting exhaustion at the naked point of control, choppiness, double bottom, triple bottom, even depending on if you have another 4/5 here. And this is for a local day trade long. This is not a long. This is not the swing long to take us to Valhalla, right? It's a day trade long. People need to understand that, because when we talk about longs in a bear market, you're like, we're going to go down to 40k, right? Yeah, we understand that. This would be an intraday long setup. Short setups at levels of resistance, I would say by tomorrow, easily here, even maybe Thursday, depending on where we at tomorrow. It might be very boring. We're going to have to check the price action by tomorrow, but looking for shorts here would be on the bounce, would be very, very attractive. It can be a channel, right? 3-wave structure, you overlap, you break the trend, and then you move down in that wave 3, right? You're labeling this as 1 2 3 4 5, right? You're coming down in an impulse. So shorts will be looking attractive. However, it will be looking attractive on the bounce. Okay, so yeah, that's a little bit here on this scenario, right? That's a little bit on this particular scenario, that your corrective structure finishes here. 3-wave move to the upside in a double zigzag. I'm not a fan of this Y wave. Very quick, very fast, but it's possible. There's no invalidation on. It's just it was very, very fast here to the upside. So multiple 1-2s. You're breaking down. We need the 4-5s. It doesn't matter where they come. It doesn't matter if it's here at the level of support or if it's down below 59k. You just need to remain patient to see where it's going to happen. Then the longs are attractive. Okay, so it really is a patience game here. If the price were to V-shape from this point, it's not a long trade for me, right? It's not part of my strategy. Where do we have another possible correction that finishes, instead of this pivot, at this pivot right over here? And that other correction is a sideways WXY, which there are some slight red flags, but there's no invalidation. So you got a 3-wave zigzag, your X wave, and then you have a triangle structure. Because you formed a lower high right there, and you formed a higher low right over here, ever so slightly, you do have a triangle. You do have this pump up as wave A, higher low wave B, lower high wave C, higher low wave D, lower high wave E, and that's it, right? In a triangle you have 5 pivots. Once you have 5 pivots, you know, you move to the downside. So from this pivot low as the correction, you got 1, 2, 3, 4, 5, A, B, C, D, E. So it is very, very possible that this is a sideways WXY. The problem is wave X did not retrace even to the 50% Fibonacci, which is most commonly when you're in a sideways WXY, you correct between 50% and 7/8 Fibonacci. It's a very common area for the wave X to form a more sideways WXY, and this one does look like a little bit steep, not very sideways at all, but there's no invalidation for it. So you got the triangle in wave Y, and that means that you would be starting the impulse from here. 1, 2, 3, potentially 4, 5, and then you get the bounce. So as the wave starts from here instead of here, as explained on the previous one, because you got this momentum, a bit of sideways move, you're getting the acceleration here to the downside now, right? It is getting a bit steep. What you would want to see is a small consolidation and one more leg to the downside. If we do get a small consolidation here, we can treat this movement to the downside as a local impulsive move down. This local impulsive move down is missing a 4-5. If you finish this correction from this low at this high in a WXY triangle in Y, your impulsive move starts from here. 1, 2. I can see a 1 and a stop. There's a little stop right there. Now you get the move down with high volume, which we like to label as wave 3. You need a consolidation in this territory that does not manage to reach from the last lower high here to the low, the golden pocket. If price moves all the way up to the 62,200, we are no longer looking for a wave 4. That means that something maybe could finish here. So it's very, very important. If price does get move up here, it's going to be interesting to see how we got up here. But anyway, going with this, if we do get sideways momentum, little pump to 61.7, 61.9, and then we move to the downside, retracing at the 382 50%, that's where I know that this could be a little impulsive move to the downside, which can give us a possible aggressive sniper long trade on the fifth wave, coming at the level of support, which is that naked point of control from the weekend. If we do get a little consolidation here with this bounce, I would be very, very much interested in a day trade setup. So what I need to see here, I need that touch at the point of control. We consolidate, we get a bounce here. One more low for the bounce to reach the fourth wave target, potentially even slightly higher, but overall this would be the setup of the day in the next coming hours, which is very, very available. That is considering zigzag up for W, corrective structure for wave X, and a triangle in wave Y, which has finished right over here, and that's where the impulse starts. The most aggressive move happened now in the last couple of hours. So a wave 4 and a wave 5 here would be ideal to come down to the support zone. There is a bullish case scenario that you would bounce to even higher prices to get above 64.3k. There is a bullish case. There is a bullish case that is going to be explained, which is attractive regardless. For the bearish case here, this would be a wave 1, wave 2, and then wave 3. You finally get down to 59k. This is only an intraday long setup. Shorts will be looking attractive. However, shorts need to be looked at by tonight, tomorrow, not now as we're moving down. Obviously we need a bit of a correction. So this is a intraday possible long setup at level of support, right, where we can scratch some dollars off the market. Before we talk about longs or shorts or any of that, guys, I need to give that disclaimer, of course, that this content is for educational purposes only and is not financial advice. The information provided is not guaranteed to be accurate or complete. Always conduct your own research before making any financial decision. Okay, so yeah, you're probably a little bit tired with the waves and with the scenarios and the confluence, right? Are we going to go up or are we going to go down, right? This is the main question. We are traders, right? We adapt to the conditions. If we can scratch some dollars off the market in a intraday, we will. And this for me would be the possibility after forming this local wave 4 and 5 into that level of support. So let's see if that does happen. We're getting a little bit of a local bounce, which is fine. That's a good sign. Local bounce here. If it's going to be weak, one more leg to the downside. And this is the area where I want to see a reaction. If I lose this level, if we lose this level, then no long trade to be taken. Okay. So that's a little bit of a level. That's a little bit of a scenario. It does make sense considering the waves. When we do take a look at other setups here, and other wave formations, bullish case scenario. Do we have a bullish case from this low to this high? Right? Do we have an impulse or a motive wave in the zone where we don't have an impulse? An impulse needs to be an extended wave 3, an extended wave 5, and there's too much overlap here with the highs and the lows. So we don't have an impulse. The only bullish scenario here would have been multiple 1-2s, but that failed as we lost this low. There's a low probability if you lose this low, we're not forming multiple 1-2s. Your wave 2 is extremely longer compared to your other wave 2s and compared to the latest wave 1. Okay, so let me just double check here. Pathmadia, much love. Thanks for joining. A Trader, guys, thank you so much. Moderators, Pathmadia, Market M, how are you doing, my man? My fingers are smelly. I had too long. Careful with smelly fingers. Much love to everybody. I'll go through I'll go through the comment section in the next coming minutes, guys. Just want to explain a few of the waves and levels. So yeah, just bear with me here. Yeah, going back here with the bullish case. So as previous scenarios on the local bounce, correction finished here or correction finished here. I've explained how I would want to see the price action develop to consider the local longs and much better a short, which would have to be identified in the next 1 to 2 days, right? Because you need that impulse finished and then a corrective move to the upside. Then shorts will be looking interesting tomorrow once we got an impulse confirmation here. And when you get a choppy overlap bounce, then we realize, guys, we just go down, we go lower, right? We're downtrending. So overall, that's what we would want to see. So let's see if we do get that finished impulse and a corrective bounce by tomorrow, right? And obviously look for follow through and tackle sub 59k. Bullish scenarios. There's always a cheeky bullish case scenario. Multiple 1-2s invalidated. There's no impulse. However, there is a possible motive wave here to the upside, and that would be a leading contracting diagonal. Your wave 5 is smaller than your wave 3. So yeah, there is a potential motive wave here in a leading contracting diagonal. We like it or not, it is there. The only scenario here would be a leading contracting diagonal either for your wave 1 or your wave A right over here, which is very much a possibility. The fact that we retraced to the 0.88 Fibonacci is a little bit disturbing. It is quite common for a wave B rather than a wave 2. So this scenario kind of becomes a little attractive, I have to say. Even though leading contracting diagonals have low probability when we consider the rules and guidelines of Elliott wave theory, right? If you have something corrective such as a WXY or whatever, they do have priority. It's higher probability that if you can count a corrective structure, which we've counted 2 already, right, where the high is here or the high is here, ending in that triangle, it would naturally have priority rather than a leading contracting diagonal. And of course, that is not impossible. We did see a leading contracting diagonal, which I had to get into a long position. We formed a leading contracting diagonal right over here. Okay, 1, 2, 3, 4, 5. It's like low probability with this slightly correction. We're going to come down to sub 60k already, right? Back in March. We did find good support in this area. We did find the value area low, point of control, and a valid option to believe that this could be a wave 1 or a wave A, right? In this case, wave A, B, C, right? It was a wave A, not a wave 1. But overall, a contracting leading diagonal here for a wave 1 or A. And we understood that coming down in a 3-wave structure into massive confluent support, value area low, point of control of the range from February till end of March, right, was a valid area to long. And I was more bearish here, but nothing, it didn't stop me from taking that swing long attempt to speculate on an ABC, right? ABC was the main idea here, not 1, 2, 3, right? Or double 1, 2. I mean, we did talk about it, but it was low probability. So yeah, I mean, this didn't stop me from longing this territory. You might think, you know, leading contracting diagonal is low probability, but we did get one on the higher time frame here. And there was corrective structures to have here in this zone. So can we get a bounce here locally on a leading contracting diagonal, right? Can we form a higher low? I have to say, yeah, we can. Yeah, absolutely. You got a leading contracting diagonal potential. So how do we get into this long? Explain to me, right? When we do zoom in on the 15-minute, if this is a wave 1 or a wave A, and let me just put this slightly bigger right there. We'll put it into the bluish, something like that. We got a lower high here. So without a doubt, I need to figure out there's been a wave A and this a wave B. I don't have much options. It's a lower high. So the triangle here doesn't make sense. If we're going to break down, looking for something bullish, wave A or wave, wave A. Wave W can, very rare for it to be a triangle. So we'd go with the simple things here, and that would be a wave A, wave B. If we are going to be forming an ABC sharp correction, and it is common after a leading contracting diagonal to get a move down to the golden pocket 7/8 Fibonacci zone. So it's not off the cards here, right? It's not out of the cards that we do, you know, this could be a possibility. We are coming close right now to the golden pocket and the 7/8. You know, usually you do get a pretty steep correction after a contracting leading diagonal, which you did back in the day, right? Back in the day, we also got a movement down to the golden pocket when we speculated on this leading contracting diagonal right there, right? 1, 2, 3, 4, 5. Move down into the golden pocket, the most respected Fibonacci retracement, and the valley area low point of control of this zone. I mean, this was a kind of a must. Once we got the reaction bounce, I didn't long the low, I longed the higher low. If you guys remember, this was back on the 2nd, 3rd of April. It is on the channel where this long was taken as a potential swing to take out the local highs, which did take a few days, did hold significantly from that long because I had a swing short from here. So I ended up profiting more on the long than on the short. So golden pocket 7/8 is common as a retracement after a leading contracting diagonal. So when we do zoom in here, you know, what do we have? What do we have, right? You got the move down and a lower high. So this has to be a wave A, wave B. What do we need for a wave C? Well, preferably we do get a bit of a more solid impulsive move to the downside. And when we do zoom in, if this is the lower high B wave, let me just change this so we can see it a little bit better. You would be having your wave C being unfinished at the moment, because from wave B, that's where you start. Move down, lower high, move down, lower high, and now you're starting the aggressive move down. Same as the other scenarios, the opportunity is in the same area. However, in this case, the bounce would take out 64.2k. In the bearish case scenario, the bounce will be corrective and you're going to break down in a wave 3. Wave 1, wave 2, wave 3 later on in the coming days. But the opportunity is the same. The question is, based on what we got on the structure here, do we have the leading contracting diagonal? We don't want to give too much love for this scenario, as just as the guideline says, a leading contracting diagonal, right, doesn't have high probability compared to any corrective structures. So we want to be cautious on believing that, we're going to take out 64.2k high. But the long trade setups, the opportunity either for the bearish case, which is just getting a local bounce and then moving down, or the bullish one, which is this one, right? Wave A or wave 1, wave B or wave 2. Instead of the bounce, collapsing later on, it just goes to higher levels. So the opportunity zone is the same. We just don't know if it is going to be bounce lower high and then sub for 59k, which is, in a bear market, in a heavy downtrend, you would lean into the bearish case, which is the scenarios that we explained throughout the last 20 minutes. Okay, I would lean on the bearish scenarios, okay, naturally, because we're downtrending, right? Trend is your friend. But we cannot ignore this scenario, right? There is a possibility, because if we were to get a bounce in the coming days in this territory, right, and we take out the highs, you're going to be like, oh, well, what did we form, right? What the heck happened? Or, what was the scenario? We'd have to go with the leading contracting diagonal. We'd have to say, well, this was it, guys, right? This was the Elliott wave scenario that came to fruition. So when does this finish, right? In an ABC, your C wave preferably finishes in an impulse, right? It does finish with a 5-wave move to the downside. Because we have the strongest move developing for the moment in this zone with the highest amount of volume increasing, right? What we need to see is the 4 5s. From the last lower high, A wave, B wave, you have 1 2 1 2. You start getting the movement down with high volume. What we need to see here is the 4 5s. And that is to potentially finish your C wave, which would be coming down to the naked point of control that we have here, or range point of control if you wish. As well, it is valid. And also the golden pocket to the 7/8 Fibonacci, right? Confluence, naked point of control, golden pocket, 7/8 would be aggressive, but overall, if you are going to reclaim that point of control on the lower time frames, it will be looking pretty interesting to look for the long day trade setup. Most bullish case is climbing up to above 64.2k, and the most bearish case is that this impulse naturally is a wave 1, right? And you form that corrective structure. The bounce is poor and overlappy, and you end up breaking down. But the bounce is there. The bounce is there on the potential at this confluence area, which is 60.7k zone. We're not too far away from it, so that's a little bit it here, guys. There's no other bullish case scenario for the moment, of course, unless we get more information in the coming days. But the only main bullish option that we do have to take out 64.2k high is a leading contracting diagonal and an ABC to the downside, which would have to see the 4 5s exhaustion into that point of control. Then I would say, you know what, I'm going to take a long. But if unless we do get this kind of price action, I will not be taking the long, guys. I'm not catching the low or any of that nonsense, right? I need to see clear signs, very calculated, price action to, identify the exhaustion, identify the possibilities for the bullish case, right, which would be taking out 64.2k. And the only entry that is valid for me is getting the 4-5 choppiness into the support, which is this naked point of control at 60.5. Once we hit that level, once we get a bit of sideways momentum, then the longs is a possibility. Naturally, the long could be a corrective bounce as explained, and then we move down, right? It can be a very choppy overlappy bounce, right, where it ends up breaking down, it forms a bear flag. And the bullish case scenario would be forming an impulse, right, corrective structures to the downside, and obviously looking to tackle above 64.2k. We are reactionary traders. The overall bias is to the downside. We cannot deny that. Leading contracting diagonal does not carry the highest probability compared to something corrective, which are the scenarios that have been explained in the last 20-30 minutes of the stream. Okay, so if you ask me what has priority with the information that is given from the bounce at 59k, I would prioritize that 59k has higher probability to be hit rather than 64.2k, because a corrective move to the upside here would have higher probability than a leading contracting diagonal. It's just because it's the rules, it's in the book of Elliott wave principle. And when we go with the rules, right, that would have to be it. But the same feeling was here, right? We had the same feeling back in March, April. Leading contracting diagonal, I don't know, man. We're in a bear market. This looks very bear flaggy, right? And yeah, we just came down into insane support here, and the leading contracting diagonal did beat the corrective scenarios, right? So, it is what it is. This didn't stop me from getting into a long position. The same as, if I am prioritizing taking out 59k rather than 64.2k, it will not, I will get into a long position if we do get that choppiness into the support. The long will be executed anyway, because I know how to enter. I know how to manage risk, right? I know I'm not having a stop loss sub here and I'm not adding to the position. I know how to protect later on once taking profits. Regardless if this is corrective, we'll be looking for a short opportunity. But, who knows? What if it does end up rallying to get above 64k, right? And then if it is going to be an impulse, then, how high can we go? I would want to be in that position, regardless that I'm prioritizing 59k. So longs, the long at the moment is very, very difficult in this zone. Very, very difficult. You really need good patience, knowing exactly what you need to look for at the support level. And I know it sucks, but it is what it is, right? We need to see those clear scenarios to consider that long trade, okay? Because for the moment, it is true that there is priority for this to be corrective, and that wave 3 here could just, nuke down, right? 1 2 1 2 1 2 3, right? 4 5 4 5. We end up getting down to sub 59, 57k zone, into the levels of support, which I would be incredibly interested in major swing longs down here. If we were to move like this is going to be the opportunity area, with no doubt, to look for longs. So that's a little bit it here locally, guys. Much love to everybody. Just explaining a little bit of this move, local levels of support, And let's see what happens throughout the next coming hours. For the moment, it is rolling down, so that's what we need to see based on the longs. Just going to go quickly through the comment section, see what the people are saying. I am currently in no local trades. Currently in no local trades at the moment, guys. And let me just go quickly through the comment section and say hello to the beautiful community and see what people are saying. Right, on the votes here, what comes first for Bitcoin? Sub 59k, 64%, 64k plus, 36% out of 200 votes. Let's do a like button recount, and I'll go through the comment section and we can discuss other analytics, other data here, guys. We do have the mindpillar.com market, of course, where we do have CVD. We're going to take a look at CVD. We're going to take a look at the liquidity. Remember that this is for free right now. We're trying to make this extremely easy to use for the people. Have the liquidity on the CVD chart, have the CVD, which you can choose the exchanges. Also, you have many different tools and indicators, the heat map. Okay, you do have the economic calendar. All this is for free for the moment, guys. We are likely going to extend this for free for some time, but it's just so people get to see how valuable. We're just combining all the data here into mindpillar.com market, okay? And you have all of this. We're going to be implementing order flow as well, which is basically seeing the volume in the candlestick very, very soon. That is also coming up here. And we're just making a huge trading powerhouse. And you can use that for free right now, guys. It is valuable free tools at mindpillar.com. Take advantage, guys, and you can see what it's all about here. So let's take a look at CVD. Anyway, let's do a like button recount. We can get to 150 likes, guys. I'm just going to get a sip of water and come back and what it's all about. We'll go through the comment section. Let's get to 150 likes. That will be absolutely awesome. And I'll go through the comment section in just a minute. Okay. All right, let's go through comment section, see what the people are saying. There's more people favoring that we do get sub 59k when we do consider the probabilities and Elliott wave theory. It does favor that this movement has higher probability to be a correction and that we are starting an impulsive move to the downside, okay? Bullish case, leading contracting diagonal, and a corrective sharp ABC to find support and get the bounce. Has lower probability for the moment, but that's not going to stop me from understanding what I'm looking for here at the level of support as explained, okay? So we're going to have to see. Need a little bit of more patience here. Come to support, get the choppiness throughout the next coming hours. And then this could be interesting for that bounce. Will the bounce form a lower high and get to 59k, or will it go to plus 64.2k? That's, this is what we do not know based on that opportunity. Hopefully tomorrow, we do get a very, very corrective looking, there's the sniper trade at resistance. If you form bearish CVD divergence, it can be a very good attempt. Unless you form a channel-y, three-wavy structure and you get into the break of the channel, basically, right? Similar to what happened today here, right? You get that trend, overlapping structure, entry on the breakout, right? With stop loss at the last lower high for that attempt to tackle 59k, right? That could be happening between tomorrow and Thursday. If we do get a local rangy bounce, okay, we're just gonna have to remain a bit patient here, unless we just nuke down, right? Because that is an option. That is also an option where the price just follows through here, And if it follows through, we need to wait for this kind of price action somewhere. Where is it going to happen? Is it going to happen at the lows at 59K? Or is it going to happen at 57K zone where we have all of the levels? Point of control, monthly point of control, daily levels. We just don't know where it's going to happen. But once it happens, we will be ready to look for the long trading setup. Inside of the trading community, we are discussing all of the different setups and scenarios, trading opportunities, trading levels, confluence levels, every single day in the trading community. We do get ready for possible trading opportunities every single day in text with levels, possibility and scenarios. We look for the opportunity. Sometimes we get it, sometimes we don't. But the information and getting the plans ready is what we do every single day inside of the trading community, guys. And if you are interested in joining, send me the word access. It's not only swings, it's day trades as well, locally, and we do the hard work for you guys. If you're interested, send me the word access in the Telegram. If you do join one of the affiliate links down below, you will be getting a few months for free, and you can extend those months. You can choose Bluffin, you can choose 2-bit, weeks. There's many different platforms down below. Right now on Bluffin, you got 25% off your fees, guys, and $500 deposit bonus. You can see it under me, okay? Also, you can see it right over here. $500 deposit bonus. If you do deposit over 2.5K, you will be getting that, okay? For the new signups, and also 25% fee discount. Take advantage of that, guys. You got the links down below, and you can get access to the trading community. That's where we look for the internal plans every single day. Let's go through the comment section. BTC 49K around June 18th. Interesting. Around about June 18th. So June 18th is right over here. That would be on Thursday, next Thursday, about 49K. Right, let's get a box here. 49K. Ooh, that would be fast and brutal. Around the 18th of June, which is this vertical line, the white box down here at 48K zone. That would be pretty brutal. As it, I would have to say that would be an extended fifth wave of the extended fifth wave, right? Not sure if there's going to be as much brutality to dump down another $13,000 in the next week, basically. Not sure if there will be enough steam, enough time for that to happen based on the brutal move kind of already happened here. Yeah, let's say it's possible, but we got lots of support. The big brutal move already happened. But overall, we are in a bear market, right? We are downtrending, so we obviously need to take it into consideration, right? That we do go down as low. I would say that would be low probability, so you can bet against that if you wish. Devil, much love. Smash up the like button. Thanks for joining, Devil. Devil, the master man himself, doing the live streams in the morning. Andy, we have a naked weekly point of control at 60.7K-ish. That's the point of control I like. Yes, we do have that level also, which is literally from this range. Yeah, it's a very, very interesting area for a local bounce, right? 60.7K. It is without a doubt a interesting level. It is a very, very interesting level for sure. Right. Comment section time. Much love, Divine Hood, guys. Go and check Divine Hood. Also got a channel, Divine Hood Trading. Thanks, Andy. Take care. Much love, Distance Music. Seems the best time to enter any trades is only when liquidity is grabbed once accumulated. Best time to enter. One of the best tools out there right now, even better than paid ones. Thanks Andy and Devils. Thank you very much, Singularity X. We are building this up, guys. We are very much in the game. We got CVD. We'll be implementing order flow and footprint as well. So imagine having that right here on mindpillar.com. You got all-time high percentage drawdown, CVD, which I know a lot of traders do use. We like this CVD very, very much. We're actually going to check CVD right now. Heat map. We got economic calendar, of course, which is free in a lot of places, but there's many, many different tools, as you can see here on the tabs, guys. Take advantage because this is for free right now. Liquidity also on the CVD map, okay, where you can see the liquidity. So yeah, take advantage, guys, of these free tools that you do have at mindpillar.com. See if we do sweep up that liquidity. There's a big chunk right there where we do have the point of control. Do we have any bullish CVD? I know we do have some bearish local CVDs forming on Binance US dollar tether. There's some slightly higher highs. There are some longs here entering on Binance using Bitcoin as collateral. Not much here. Not much US dollar tether on Bybit US dollar. We do have bullish CVD divergence on the formation from the last few days. I mean, these ones have already been playing out already. So we got higher lows, lower lows on CVD on Bybit, which has been taking out the local highs the last few days. So yeah, we don't have any really nice fresh bullish CVD divergence, even though there are some shorts and longs entering here. Yeah, the bullish CVD divergence have technically played out already here on Bybit the last few days, taking out the highs. There's no fresh lower lows on CVD here, unfortunately, so it's no nice bullish CVDs, unfortunately. If we were to have lots of shorts entering the market, it would be ideal for that bounce to take out 64.2k, but that is not the case. We don't have a huge amount of shorts entering the market. Andy, what's a good take profit zone if we are in a short already? Sanjay, good take profit zone would be the point of control as a first TP, especially if you get a reaction here, especially if the price starts dancing in the coming hours. A local bounce is high probability if you dance into the point of control and find proof of support. If you get proof of support here and you're chopping, well, we're coming to the conclusion that's either a A, B, C, and in that C wave you got the 1 2 1 2 3 4 5 4 5. If you dance around in this 60.7k, it's not a bad idea to take some profits because the bounce could be heavy. It can be a poor bounce and then down. It can be a strong bounce and take out 64.2k. If you do not get any reaction, I would say don't take any, I would say as long as we're going down and there's no proof of support, I would aim for 59k, right? If we are getting the momentum to the downside, we break the support with a bit of volume and there's still no major bounces and choppiness, then your ultimate take profit is sub 59k. But the first level of support that we do have right now, where current price action is the point of control, naked weekly point of control, right, from last week. And if you do get the dancing action here, depending on where you shorted, either here or either here, right, it's a good zone to take profit because a bounce will likely happen. So yeah, that's the answer to that. Sanjay, much love. Bath Maria, thanks for joining the stream. Right, let's go through. Ramsey, how are you doing, my man? Oliver, thank you, my man, for joining. That would be great, says Dimax. Why don't you pull volume for the whole range since the dump? The volume from the whole range since the dump, is that on the lower time frame? You mean here? I mean, it doesn't really matter. The highest volume node, there is a high volume node here regardless. I'm not sure if you're talking about the higher time frame or the lower time frame, but you can see this, you know, if you wanted to say all of this, this is still value area low. There's still the high volume node right there, as you can see, since last Thursday. So yeah, this is an interesting area without a doubt. It's the next major support zone. And the question is, if you break it down in the next couple of hours, longs will not be looking interesting till you get to sub 59k. I mean, that's for me anyway. If you get the reaction reclaims in the coming hours, a bounce could be looking interesting with a double or triple bottom or a higher low after forming a double bottom, right? The reaction at the confluence area is, you know, will look attractive. I think, you know, it would be a scenario that I would be looking for a long, because I understand the bounce can happen. Will the bounce form a lower high tomorrow, right, and nuke down on Thursday, Friday? Or will we manage to claim 64.2k? That is the question. We need to analyze this price action tomorrow if we are going to get supported here. But where the price has its best chance to form a higher low, I mean, look no further. It is in this zone. Do we have any Elliott wave theory to support the possibility of forming a higher low and, you know, claiming 64.2k plus? There is, but it's not the greatest one, right? It's as explained before, we may be getting some new people coming in here. It's a leading contracting diagonal, which doesn't carry the highest probability if you can find something corrective. But hey, we've seen leading contracting diagonals not too long ago, just a few months ago, right? Which was this one right over here that did end up, right, forming a higher low. I mean, the support that we had here has nothing to do to the support that we have now in this zone. I wouldn't consider this area being a huge amount of support. We're going to bounce yes or yes. The support that we had here on the higher time frame from this leading contracting diagonal and an ABC was massive. It was the value area low point of control of a few months, and we were coming down to the golden pocket. But you can see golden pocket or 7-8 is where you usually get the bounce after a contracting leading diagonal. This naturally was a wave A, this was a wave B, and this was a wave C. A, B, C. Now, golden pocket 7-8, 3-wave move down. You know, you do have a leading contracting diagonal. You do have support. You do have the golden pocket 7-8. That's where it should bounce if it is going to be that scenario. So yeah, it's actually an interesting zone. It's not going to be an easy long trade, I have to say. It's not going to be an easy long trade. You need to see exhaustion. You know, you need to see the level being tackled a couple of times, slowing down, and that's when you can speculate on an A, B, 1, 2, 1, 2, 3, 4, 5, 4, 5, right? And then you possibly have an ABC here. And if this is the correct count, we are looking to take out 64.2k in the coming days. So, now it's all about how do we execute this long? Well, as explained, I need at least 2 more lows here. 2 more lows in a choppy range, okay? And why is that, right, you may ask? Because from this lower high, B wave, you have a 1, 2, 1, 2, and then the power comes here. So I need at least 2 4 5s, as I do have 2 1 2s. So at least need this for me to speculate. 1 1 rangy structure. Now I get ready for the long position. It's right now it's impossible for me to get into the long. I need 2 4 5s, and that's just my rule, my strategy, what I need to see. I need to see exhaustion here and proof of support. Getting into a long right now, and believing that this is going to happen is not the way how I trade, right? Because some people would say it's going to bounce. I'm just going to put a stop loss here at the low, and I'm going to target the highs. Well, the probabilities are not in your side, right? The probabilities, we're downtrending, right? The probabilities to take out 59k are higher because we can count a corrective structure here. So to be more confident, instead of saying, there is support here, I think it's going to bounce, I'm just going to jump in the long, right? And then it just, breaks down. And you're like, oh, well, you asked for it, right? You did not wait for proof of support in the next coming hours. That's where it can be interesting to look for the long position once you get that price action. Because this price action would be proof of support, right? So until that doesn't happen, longs are not attractive, I have to say. Longs are not attractive unless we get that choppiness. And it's as simple as that. When we talk about simplifying things on the decision, this needs to get exhaustion and choppiness based on the 1 2s here, if this is going to be an ABC. If not, we go down to 59k, which is naturally the highest probability, because a leading contracting diagonal does not carry the highest probability on its own. So you need a lot of information, but not much right now, because you just need the 4 5s. We get this, that's for me a valid long. Will the long be a shallow bounce? There is the option of being a shallow bounce here, because there's 2 ways of looking at this WXY as explained. Could finish here, it could finish here in a triangle. Yeah, it doesn't really matter where it does. If this is going to be bearish, you're just looking for follow through on this wave 3. You really are looking for follow through, despite having 1 2 1 2 1 2 1 2, right? And then this just continues nuking down in the next coming hours. Then your 4 5s are formed into the monthly naked point of control and the daily. That's where the longs are going to be looking attractive. Or the other scenario is literally finishing that WXY here, zigzag, wave X, A, B, C, D, E, Y in a triangle, 1 2 3 4 5. You get the bounce, and then you break down, and what you form here is a 1 2 3 4 5. But this at least needs a stop here in the coming hours for the impulse to finish. If you're finishing in a triangle right over here, you got wave 1, wave 2, and wave 3 is getting developed. This needs a stop. It needs a stop bounce. Then this movement down can be interesting for the local bounce. And that would be only a local bounce in this bearish case. Shorts can be looking interesting, you know, by tomorrow or Thursday, depending on how we develop this bounce. But yeah, shorts are obviously have priority in this downtrend. So the bouncers, you know, should look at levels of resistance for the short, unless you're getting into a breakout trade on a bearish channel, right? Breakout trade, entry, stop loss, targeting sub 59k. But this short setup would be potentially valid for tomorrow. We need that bounce. We need that choppy bounce, targeting the low and maybe even lower. So yeah, that is basically it here when we consider the waves and the opportunities. Much love, much love, much love. Let's get that like button to 150, guys. It would be absolutely awesome. Also, gap at 61k. Yes, like that. Thinking of longing this value area low. Okay, like that you said. Yeah, the value area low, which is, yeah, basically where we got that high volume node. As explained, you know, we are in a downtrending market, right? And this, for the moment, has priority to be corrective. You're moving down right now. Yes, we do have support, value area low, in that weekly naked point of control, which is at 60.7, right? Which is that high volume node here on the chart. Man, you know, in a downtrending market, it's difficult. You've broken this. It looks very flaggy. It is difficult. You know, you can obviously attempt the long if you're happy with a stop loss, give it, take a bit of room. You want proof of support here. If you V-shape, that it is what it is. You know, we're not seeing very much V-shapey structures lately to the upside. So getting exhaustion would be the ideal scenario in the next coming hours to look for that long proof of support, right? It is true that sometimes you hit a level and you can kind of SFP it, right? Where you just tap it and you go. Would I treat it as a tap and go level? Yes, you know, you can treat it as so. But I would want to see 60.7k be hit. That's where we have the high volume node. You know, if you were to V-shape from here, that's depending on how you're feeling. Are you feeling more like you want to gamble it? I don't like gambling on when I'm looking for trade setups. I like to look for high probability scenarios, right? And the highest probability here for the bounce would be getting the choppiness in this zone. Just understanding how we move down from this high. It's either A, B, C. You got 1, 2, 1, 2 in your C wave, 3, 4, 5, 4, 5. That's what I would want to see to be confident in this this long position. But you know, in a downtrending market as we do have, wave 3 here could still be developing, right? 1, 2, 1, 2, 1, 2, 3, and it just continues down, and then we form this choppiness, you know, down here, sub 59k. So very, very difficult for the long at the moment, right? And what is most important in trading for me is to preserve capital, right? I would rather miss the long if it's going to V-shape from here. I would say, you know, I didn't get into the long, you know, it's fine. It doesn't matter. So yeah, it's for me, it's important to get exhaustion here at the moment and proof of support to consider the long, because we're downtrending, we're moving down, and obviously the bears have priority in this downtrending market, right? Much love. I learned so much from you, Bath Maria. Thank you so much for the kind words. Much appreciated. I'm 1 mil long from 63 and 1 mil short from 61. Feels like crying. 1 mil long from 63 and short from 61. Not the greatest hedge, right? If you are long from 63 and short from 61, it should be the other way around, right? Short from the highest point, try and long at the lowest point. I guess you're quickly hedging your long from here. Not the greatest entry for the long. You should have, I was explaining today inside of the trading community that if you lose this higher low, you should not be in a long position. Okay, because we do discuss inside of the trading community the bullish scenario and the bearish scenario, but we are very clear on the invalidations. The most bullish case scenario here, if you are long in this uptrend and you're long in somewhere here or for a higher low, if you lose this higher low, you do not want to be in a long position till you get down to levels of support and find the exhaustion. And we leave that very, very clear. An invalidation, it means there was a bullish case scenario. It already had a low probability. Your wave twos are extending. But if you lose 62.4K, which we were just a few $100s away from it, it was low probability. Invalidation, you should not be in a long position if you lose 62.4K. It's an invalidation. You do not want to be in a long here. Then other longs should be looked at down below at levels of support. So we guide on when not to be in a long, right? The probabilities inside of the trading community because it's important, right? There's no way I would have been interested in any long positions anywhere down here until we might get a long signal in the next couple of hours. I would give it a couple of hours because we're going to come down now to that naked point of control and let's check the reaction, right? Let's check if we do get some choppiness. You want at least one local bounce and at least one more low. Then it could be looking interesting for a double bottom, regardless if you take out the low again, right? But overall, it's all about trade management, entry, stop loss. This might be the one, and that's the one that pays a 3-4 to 1 risk reward. But you seriously need a bit of this choppiness down here, because if we don't get that, longs will not look attractive if we do not get this kind of price action. If we don't get that, we just look to break down to get to sub 59K. So let's see in the coming hours if we do get that choppiness. Much love, guys. Thanks for smashing up the like button. We can get to 200 likes. Much appreciated. As you can see, Bluffin right now has a great campaign, guys. You get 25% fee discount. That is down below. As you can see, you have the information right over here. 25% fee discount and a $500 bonus when you deposit 2.5K. Okay, once you hit the link, which is this one, the second link, you will be getting those perks. Smash up the like button. Olivier, much love. Buenas, thanks so much for all of the value, you guys bring to all of us. In my own opinion, 60K won't hold. We might get this little bounce. Yeah, I mean, as explained on the bearish case scenario, you want to be aware that if we do get that choppiness in this zone, a bounce will be highly likely, right? A bounce will be highly likely. However, we need to understand the corrective scenarios that have been explained at the beginning of the stream, which is a WXY, finishing Y here, or in the triangle here. You need to be aware that if this is a corrective move in a WXY, you are looking to take out 59K. So even though you get some choppiness here at the support and you do get that bounce, there is obviously the attractive shorting scenario. This would take 1 to 2 days, of course. This is the 1 hour time frame. It will take a bit to develop that local bounce. But the question is, on this possible bounce, if you get some choppiness, do you form a lower high in a wave 2 to then wave 3 down in the coming days? Which would obviously be the most clear bearish option, right? Because we're downtrending, right? It's just like we look to go lower. Or do we get a larger bounce in the case of this is a leading contracting diagonal, which we do not give priority, right? To have a sharp ABC down, we find support and we bounce to take out 64.2, right? Seems not a very, very high probability scenario, but it is very, very possible as one of the scenarios, right? Depending on how strong the bounce can be after the choppiness. Do we get a big push up correction, big push up correction, and then you form double 1-2s here, and then you break out in a wave 3, right? As the surprise pump that we don't know, but this is why analyzing the move tomorrow is going to be important to understand if it's going to be looking good for shorts, breakout of the trend of the flag, right? Or are we actually going to take out 64.2? The opportunity for the longs really is going to come in the next coming hours. Getting the choppiness. Obviously, I like to long, if I can, at the lowest level possible, instead of getting into a long, tomorrow on higher lows, right? Getting into higher lows is going to be challenging, especially if we do not get massive bullish CVD divergence where we do have lower lows on the CVD. That's what we really want to see. We want to see massive lower lows on the CVD tomorrow if we do get that bounce, to be confident that we could go to higher prices. But if I can catch the exhaustion in the long and be positioned already when we're trading up here, much better, right? Because getting into a higher low is going to be challenging. I mean, your stop loss in a multiple 1-2 does become your latest higher low. So that's if we do get the breakout, of course. But for the moment, we're breaking down. We're not getting exhausted yet. So, longs are not part of the game at the moment. Longs are not part of the game at the moment. We need this. We need this price action here locally, which is, we might be getting it. We might be getting it. It's all about being patient. Once we get it, then looking for that long bounce is going to be an option. Okay. A little bit of choppiness. We didn't quite hit the naked point of control as of yet. But it is slowing down a little bit. It is slowing down ever so slightly. The thing is, because of the high being here, and we got this rangy lower high structure here, the fact that if we were to V-shape from here, it's just it's a difficult long, because we got this choppiness, I want to see a little bit of choppiness here, which is going to take a few hours to develop. This choppiness on the 15 minute time frame is not enough. It's not enough. This could still be, developing the wave 3, right? Very, very small little bounces, and it's still developing the wave 3. You need similar price action in time from these bounces. So as you see, right, you need a bit of time here for these bounces on the 4-5s to say, right, now we could be getting the bounce. It really does require a little bit of patience, but it might be tonight. It might be tonight. It might be in a few hours. We still need, I still need to see that kind of price action here. If we tackle the lows, bounce, tackle the lows again, and we're bouncing and reclaiming this level, it's going to be the moment to get into the long position. And it might be just a little move, a quick scratch off the market. It might be a big move to plus 64k. But the positioning will be once we get that exhaustion. I cannot get into a long here, right? If it V-shapes, which is unlikely, but I can't get into a long at the moment. 1000x long. Much love. Smash the like button. That is Best Alpha on YouTube. Thank you so much. Yeah, we do really try and go with the difficult analysis, right? Which not many people say. I could just keep things very, very simple and say that if we do get a flag here, then we look for a short on the break of the trend and stuff like that, right? But we want to keep it professional. We want to keep it challenging for the people to learn the hard way, right? Learn properly how we try and read the market. We are in a fib golden pocket from 59 bottom and 64 high. What do you think? Yeah, it is an interesting zone. We are at the golden pocket, as you mentioned, coming into the golden pocket. The problem is the weakness, right? As explained, if we were to get a bounce from here, for me it's a miss long. If we bounce right now in the next 1 to 2 hours, I cannot get into this long personally. It's all been explained, not even, maybe a little scalp. I would consider a scalp long on a tap and go little move of $500-600 maybe at the 60.7k level. So I would be happy to get into a sniper SFB reaction if we get a drop here to 60.7k. I know we could likely get a little bounce at this point of control, 60.7, but it's going to be a fast execution. I'm not sure if you guys were here last Friday. I know part of you were, but the SFP, I made about $8,000 on that SFP, and we bounced $1,000 only on the price action. You will see. I'm if I need to get into a sniper trade, I'll be very, very defensive with stop loss, and we bounce $500 to $1,000, I'm going to be out very, very quick and protecting position. But this is only for the experienced traders. But if you were here on Friday, we took advantage of this little bounce. It was $1,200. Well, hang on a minute. Yeah, about 1,400. I was already collecting most of the profits when we bounced over $1,000. So that was taken on a live stream on Friday, if you remember. Managed to lock in, a good chunk for a Friday trade on an SFB. We just tapped the low at 60k, slightly below 60k, and this was traded on the live stream. Only a little move, but you don't need massive moves, right? It is nice to get into swing trades, but a little scalp trade, you know, that's where I made most of my gains last week. It was on that Friday SFB. So yeah, I could probably treat this level as I understand that the bounce will be very, very small. I do know that. You know, this is not the kind of long for a V shape. There's no way. If it were a V shape, then happy days. But I understand that this is a quick reactionary trade. I would be expecting the low to be hit again. It's a scalp. It's, you know, when we're looking at the possibilities of wave 4s and 5s getting developed here, you know, if I'm longing that point of control, we bounce $500-$600, you know, I'm going to be out very, very quick. But you know, there's gains to be made on that little move, because we're slowing down ever so slightly here. Yeah, why not? Let's wait to see, and I'll just explain the execution, because some people don't, you know, they have a hard time to execute or understanding the SFP scenarios, right? This was a scalp long on Friday, and in less than 1 hour I made $8,000. So it's, you know, this could be something similar here, but I know the bounce, I'm not expecting a major bounce here. And the main reason why is because from this high, or this high, well, let's say with this one, if this is going to be multiple 1-2s, and that's your third wave getting developed, I know that 4-5s here is going to be a possible option. So, you know, I do not expect much out of this bounce. I don't expect it to go up here. So it's going to be a quick 2-3 to 1 risk to reward kind of setup, where, you know, once I'm making a 2 to 1 risk to reward, happy days, taking most of the profits, protecting position, because I understand that, you know, I'm probably going to get wicked out later on. But it's a bouncing zone, right? It is a bouncing zone, and sometimes you don't need huge moves to make some really nice gains. So let's see if we do get down there to that point of control. We're getting very, very close to it. Let me just get some fib extensions here to add, to see if we can add some confluence. Maybe see. Yeah. Yeah, not that we have an insane amount of fib confluence. I mean, if this were to be a wave 1 ABC in a WXY, sideways WXY, you can get your fib extension out of speculation, even though if this is not, if that's your B or if this is your B, there could be a sideways correction here from this high to this low to this high. Just looking at some extensions, yeah, the 1.618, when we consider this as a sideways correction, is coming in slightly below that point of control. It might get slightly below and then recover. I'm not going to be able to long anything below here. I need the reaction at the point of control. I can't long below the point of control because I know it could just follow through. So yeah, not a fan of this 1.618 extension speculation there. We are at the golden pocket. It is true. It is true that we are at the golden pocket from the low at 59k to the highs of 64.2k, but you know, if this golden pocket were to be slightly lower, that would have been ideal, to be inside of 60.7k where we have that high volume node. I mean, that would be I would then long the golden pocket. So yeah, could it bounce from here already? It could. For me, it's not enough confluence. And I am a very patient trader, right? I would rather miss the long in this local bounce of $1,000 maybe, right? Or 500 to 1,000. I would want to get into good support, which is, you know, obviously that volume profile point of control. Golden pocket here is not much of a level for me here. If a golden pocket were to be exactly where that point of control is, then it would be more attractive for that local bounce. But yeah, on its own, yeah, not for me. It's not for me. So let's see if we do get that little squeeze down for that little scalp execution at the point of control would be ideal. If it bounces from here, yeesh, so be it, I have to say. So be it. It's not my trade. SPX keeps dumping. Thank you. You're very welcome. Can you check Ethereum, please? There is also a daily level there. Daily level. Devil says there's a daily level. Oh, yeah, we got a daily level. We got a daily tap. Daily little tap and go. Little bounce now of $200. Yeah, I was not aware. I had the daily level here on the folder. But yeah, that's interesting. Daily level with the golden pocket. Yeah, daily level. Maybe Devil did catch that quick little scalp. Just hitting the 6.5 Fibonacci. So yeah, we did get a little reaction at the daily. I like to treat dailies as well as a sniper trade. So daily level tapped, little reaction bounce of a few $100, nothing too major, but you know, these executions are taken as so, right? You get below the daily, you get above it, and your execution happens when you get above it, because the low is your stop loss. You need that reclaim, right? You need to get back above. Very, very snipey, tradey. But yeah, I didn't get into this daily level. Devil probably did. I mean, this is already making a 2-to-1 risk reward. So these are quick trades. That naked point of control would also be an option. But yeah, daily level, the fun thing about this daily level is that we were also at the golden pocket from 59k to 64k. So daily level 6.5 Fibonacci golden pocket zone. You need to manage risk very, very well on these setups, like 2-to-1 protect position. The same scalp is valid. The same scalp would be valid here at this level of support. I mean, the problem for the shorts is that we don't have any, you know, major levels, right? So, you know, if you're getting into the lower highs here, you got more levels of resistance in the next coming days. That's if we do get the choppiness here and then get the bigger bounce, then we're gonna have to look for shorts at the you know, previous day naked point of control or range or value area low with the golden pocket. Then the shorts could be looking attractive tomorrow, value area low, golden pocket, right, for the bigger move. But right now, little scalp longs at levels of support are actually quite attractive. They're quick in and outs. So the next one would be naked point of control at 60.7k. Let's see. Much love, Devils. Thanks for joining the stream, my man. Much appreciated. Devil doing the morning updates and live streams like an absolute legend. I want to see another 4-5. Me too. Even though a little quick scalp long at the point of control is going to be valid for me. I would be happy to take it, because that's where potentially you form your first 4-5, right? And then you get the movement down again, which is going to be interesting as well as a double bottom. If you do reclaim, maybe another 4-5, and then you get the move up. So you're going to have to manage risk here. You don't want any trades. If you lose the previous lows, don't be in a long position. You need to get some reclaims, a little bit of a reaction at the lows. If you lose the lows, you lose the point of control. It's for me, it's not going to be worth it, right? Even though if you do get down, you don't claim the low and then you recover. It's just for me, it's not an area that I would be interested in any longs here, really. It needs to be here above point of control, local double bottoms, get a couple of 4-5s, either 1 or 2, and then look for the bounce. But yeah, we got daily level getting a reaction, naked point of control. I missed the daily level entry, but I would have attempted it. I was just too focused on the naked point of control. But the daily level is very, very valid for an entry. Kind of quickly back tested it. I did not take this one, waiting for the naked point of control. Me too. Let's see, Andy and Devil Legends, Nitro, much love. Let's see if I can make another $8,000 on a little scalp of $500 of a move. Would be nice to see if we do get it on stream, right? So you can see how we execute these sniper trades with good risk management. But yeah, interesting enough to say that we do have, when we talk about confluence, a daily level combined with the golden pocket from the low to the high is not bad confluence for a reaction bounce of a few $100s, right? Just understanding where we are at the moment, that you would not, I would not expect a full-on recovery from here. I'm not expecting this, but local reaction bounces of a few $100s are very much something that I would expect in the case of potential 4-5s on the formation reacting at these levels, right? And then if not double bottom, if you get one bounce, take the low and another bounce, I would be very, very happy to take this long, because I know we got a 4-5 here already. And I understand that we could get another 4-5. And then the triple bottom will be the entry point for a larger bounce in the coming days. Will this bounce take out 64? Or will it form a very, very choppy uptrendy structure in the next 1 to 2 days? And it looks very, very bearish. Then we'll have to get out of the trade and speculate on the short. But for the moment, we are at local support, daily level, golden pocket, missing the point of control by $100. We do have some local support here. 15-minute divergence. Andy, salute. After all this year in crypto, no gray hair, and it for 6 months feel like I aged 10 years. Wayne, yes sir. No gray hairs. Yeah. Crypto can be pretty you can age very, very quickly, or age like wine. Much love to you, Wayne. 15-minute divergence, is that on RSI or CVD? How would you snipe the low if you get the chop. Mohammed, sniping the low, the chop is on the 50-minute time frame. So you literally, this would be a bounce that could take a couple of hours here maybe. And then the chop comes later on, take out the low, and then you bounce, right? How do you get these entries? They are scalp longs, right? You're looking for a movement of a few $100s, give or take, 3, 5, might be $1,000 if you're lucky, right? But they're just very, very local bounces. Now we're getting a little bit of a bounce here on the daily and the golden pocket. But how do you execute this trade? Well, it needs to be on the 5-minute, 3-minute time frame. You're literally getting in at the daily level reaction. Stop loss at the low. It's just an extremely tiny stop loss. And, as soon as you make a 2-3 to 1 risk reward, you want to collect those profits. And you might get a bigger bounce. You might get a slightly bigger bounce. Very much a possibility. But you need to understand that this kind of long is a scalp understanding that you could chop the lower here again, right? So in this case, the next local bounce of a few $100s is at the naked point of control. How do you execute that trade? Well, this is explained for a lot of people. We always do it, right? We repeat it because I know there's new people. There's people that are not that new and, they are tired of, I know, right? Well, those are the ones that execute the trade with good risk management. But the people that don't know, we are here for people that don't know as well, right? In that case, this is only looking for an internal bounce. The moment you cross a 2 to 1 risk reward, you want to start collecting some of the profits. It can be a 3, it can be a 4 to 1. I wouldn't say I was lucky, but I was lucky to get a 5 to 1 risk reward, 5 to 1 risk reward on the trade on Friday. My stop loss was $2,000, $2,200 to be more exact on the SFB. We got a very, very small swing failure pattern on the lows at $60,000. Okay, that long trade, and that was better actually on Binance. We were very much paying attention to the Binance chart for that SFB right over here of the low, right? The $60,000 low, which was this one, right? We did take it out on Coinbase, but I was waiting patiently. I would rather all of the exchanges take out the low at $60,000. Some exchanges 59.8, right? In the case of Binance. And my stop loss here was below the low, give or take $50 less, of $2,000. And the risk to reward happened very, very quick. We got an instant reaction bounce on the Friday stream from the lows, right, of February 60k. We did finally hit the lows, and we were very, very confident that a little reaction bounce of a few $100s was likely going to happen. And when it was lucky because the wick wasn't too aggressive, right? Because then the risk reward is lower naturally if your stop loss is longer, right? But because we got a very, very shallow wick from the lows, this turned out to be a 4-5 to 1 risk reward. And I mean, most of the profits were taken here, left a position at break even, and managed to make significant gains just on that trade on Friday, which happened on stream. And the execution and the setup was on the live, and making over $8,000 on such a small move, right? is a gift, right? For trading, this is why trading is so great. You know, I might miss some big moves. I missed a lot of the big move to the downside, but then, you know, I know how to trade the levels and manage risk on these local moves, and this is what we try and teach here as well. And yeah, just with this little move of $1,000, you know, I made the month almost, right? Wouldn't say the month, but yeah, definitely made some nice profits for the week. So yeah, I mean, this is going to be interesting here right now. I did see the Nasdaq getting a major move down. So yeah, having the stocks getting a significant drop at the moment, very aggressive move down on the stock market right now. Nasdaq, S&P 500. Not sure if this would be very good. You want to get in and out, okay? This daily level, you should be stopped out at break even at the moment. You should be out of this position. I would be out of the position already if I would have got into the daily. You pump a little bit. Let's see if we can get this trade. I'm gonna get this ready because we are going to come down to the naked point of control. Let's see if we can make some quick gains here on a local bounce. And this is scalping, okay? This is scalping. It's executing the exact level. It's an in and out, okay? If you do have heart problems, this is not suggested. Let me get the exchange ready here. We're probably gonna hit that level as we speak. A little bit concerned on Nasdaq. There hasn't been any news. We got news tomorrow. Nasdaq is taking a major dump here. Major dump on Nasdaq. We do have news tomorrow. We didn't quite tap the level yet. Almost. I want to wick beneath that level preferably. Yeah, Nasdaq is getting a bit of a waterfall here in the last couple of hours. Holy smokes. Big move down on the NQ, 5%. Woo. This is a big move down on Nasdaq. Nasdaq is finally correcting very aggressively the major uptrend that we've had in the last few months. Pretty brutal move down. Not great for Bitcoin, I would say, to get a big bounce. A little bounce of a few $100s, that's fine, but we barely missed it. We missed it ever so slightly, at least on my chart. But we are bouncing $200 at the moment. Almost $300 of a bounce at the moment on Bitcoin. Yeah, we barely missed it. I didn't catch this little bounce. Yeah, we should have at least tapped the level here to get into this execution stop loss. We missed it by a hair. I'm going to remain patient because it might just come back down and wick it. Maybe depending on what exchange you are using. We did hit that high volume node. Let me just double check here on Binance. We did tap the naked point of control on Binance, the highest volume node of the range. It was tapped on Binance. On Binance, we did hit it. So yeah, if you are analyzing your chart on Binance, you did maybe get into this quick little scalp long position. We did bounce $400 as we're speaking. Yeah, on Binance it was tapped. Very, very quick sniper execution. But hey, you know, a movement of $300-400, whew, you know, you can already make some quick gains on this. I mean, I was looking at it on Coinbase, so I missed this one. But on Binance we did. This is already making a 3-to-1 risk reward if you did manage to sniper trade this naked point of control on Binance. So whoever got in, congratulations. Easy to protect. I would not enter. This is only a scalp, guys. I would expect maybe choppiness, shallow bounces here. There's no way I can long here at the moment because this is a scalp. You know, you need to get in at the exact level. So on Coinbase, we did not hit the point of control. I'm going to start using a little bit more Binance. I got into the SFP on Friday on Binance chart. So Binance US dollar tether perpetual seems a little bit more accurate on the SFPs and hitting levels of confluence. Nice quick little bounce. As you can see, we barely missed it here on Coinbase. Highest volume node, missed by a few dollars. And on Binance, it was perfectly hit. Yeah, we perfectly hit it on Binance, guys. Not sure if, depending on what exchange you are using, it was hit on Binance. And now we are bouncing. And of course, this bounce, I would expect it to form a lower high. But, you know, you are positioned already. So the game here is you move up. You know, you're taking 60% of the profit, even 80% of the profit on this, you know, 3-to-1, 5-to-1 risk reward. Leave a runner, leave 20%, leave 30%, right? Leave 30% or 20% on this setup if anybody entered. And this is already bouncing $600-700. I missed it, guys. We can't trade them all. I was paying attention to Coinbase. And I was waiting for that Coinbase tap, and it missed it by a few dollars. But I mean, this is the thing, you know, there's trading opportunities every single day or every other day, depending on how many hours you are on the chart. And for me, missing a trade is, you know, I used to get pissed off before, but I'm seriously not bothered anymore. Seriously not that bothered. It's when you want to make the money, right? When you want to make the gains and you're like, oh man, I missed it, you know, I need more money. But that is not the case. So but yeah, we did hit it on Binance. You know, easy to leave a runner at the moment, just in case the price wants to you know, take a larger squeeze up. Hit naked point of control, hit on Binance, not hit on Coinbase. I mean, that's what you get when you have very, very specific levels, right? That on some exchanges you do hit it, and on some you don't. Let's bounce. I'm on Binance, so yeah, on Binance it did hit it. Dude, you're a legend with these trades. Grabbed it and made good money. Thank you, brother. Steel in stone. Much love to you. Absolutely awesome. Took 50% profit. Now position is protected. Deviled with the sniper trades. We got sniper army here. Missed on bluffing. Missed it too. Doesn't matter, guys. It's okay. there will be another opportunity around the corner. Now, regarding shorts, what do we have as the same can be treated, guys, to the upside. This range point of control was broken, so we don't need that. Same can be treated to the upside, okay? If we were to get a significant rally, say that we do get that finished 4-5 scenario here in this territory, and we get a bigger bounce throughout the next 1 to 2 days, you can treat this same trade execution that we had today, which I missed, but some people did enter, depending on what exchange you're looking at. I was looking at Coinbase, unfortunately, as we were waiting for that level to be hit. This level can be treated as so. 63.4. This might be tomorrow, it might be on Thursday, but it can be treated as so for the scalp. Also, same thing, same execution, nice range, nice high volume node. Check 1 to 2 exchanges, preferably the highest confluence one, the highest volume one, such as Bybit, Binance, Coinbase, and you can check 2. That's what I did on the SFP on Friday. I didn't do it for this point of control on this stream, but this bounce, $600-700, bring it on, guys. You don't need much more of a movement to make some really quick gains. And what is most fascinating about these sniper trades is the risk management. Risk management is, it's incredible. It doesn't get, the risk management and risk reward do not get better on these SFPs, on these reactionary trades. Your stop loss is almost invisible. It's extremely small. It's a reaction trade. Tap it, get above it, sniper trade, stop loss at the low. 2-3 to 1 risk reward, protect position. It does not get any better with any other strategy, because you can be bearish from here, and you're probably getting into a swing short, but you're usually having a wider stop loss, right? If you have confirmation that this is bearish, you're targeting the lows. You can have this same risk to reward on a little scalp trade. Really, I don't usually risk that much. I risk a bit more on the swing trades, but I'm usually not that aggressive with capital on scalps. That is true also, but they're just really, really good. So if you were to ask me about a short right now, it's going to take a little bit of time. Might be tomorrow. I'm not interested here in any shorts. We would have to get the 4-5 scenario, right? And then the bounce, depending on the bounce that we do get in the next 1 to 2 days. If we can detect a speculation of an ABC, right, then if we do get that rally in a 3-wave structure in the next 1 to 2 days, then I will be paying attention to this block where we have the value area low, and the point of control, which is slightly higher, I have to say, but overall value area low is also a major level of a mini range. It is a mini range, but golden pocket from the high to the low, with that value area low, it's going to be an interesting level in the next couple of days if we are going to get that larger bounce. Bullish case scenario, contracting diagonal ABC to the downside here, and a leading contracting diagonal here. Devil, what do you think about this scenario? It's one of those that can blow your socks off, right? It's like, I was not expecting that. I would want to see a bit of 4-5s, really. I want to see a bit more choppiness. That's what this is what I want to see. I want to see a bounce, and for this to take a couple of hours to then take the low again and then bounce. That's going to be a good sign for a bigger reversal. But take out the lows a couple of times in the coming hours is going to be a sign of proof of support. and a bigger bounce would be high probability then. Okay. Right, let's go. Remember that you do have the trading community, guys, down below. That's where we do provide the daily updates, the daily possible scenarios that we could be getting into, levels. We mark them every single day, such as Devil or myself. We consider them as sniper trades. We did mention this point of control already in advance. Inside of the trading community, guys, we talk about the different scenarios and opportunities every single day inside of the trading community. If you are interested in that, you know where to find us. If I'm not posting, Devil's posting. If Devil's posting, not posting, I am posting. Okay. And send me the word access, guys. We do our best to look for scalping opportunities. Okay. Day trade opportunities. I know, swing trades. I sometimes get into swing trades, sometimes I don't. If I'm not in a swing trade, I look for a scalping opportunity. Okay, so that's where we do provide the info. You got it down below here. Send me the word access to join the Telegram. Okay, I'll send you the information once I get that message. All right. Thank you very much, guys, for joining today, and I will see you tomorrow.